There's something happening here, and what it is ain't exactly clear. But if you look at the inventory now, you're gonna see you're gonna miss out. Wow, that was pretty good. I just made that up right on the spot. And what am I talking about? I'm talking about interest rates, and I'm talking about inventory. And there's a big correlation between the two. Stay tuned to the end when I get into VA rates. But now we're going to talk about the rest of the housing market with our housing market update. Prices are steady. I could have put the arrow up, but in some pockets we're not seeing increasing prices. We're actually seeing prices come down. Inventory is steady, but I'm telling you that arrow is going to go down here real soon. And interest rates are down. That's right. We're going to take a look at that here in a minute. Take a look at some of the headline news. Home prices are still rising. We got the Case-Shiller Home Price Index, the gold standard for home price appreciation. We got pending home sales. Ooh, a big surprise to the upside there. And we're going to talk about how to buy a home in Oahu. Some of the tricks that are helping my buyers become owners in Oahu. And then VA rates have dropped below 6%. Let's first take a look at the Case-Shiller Home Price Index. Again, the gold standard for home price appreciation across the country. And for the second month in a row, we saw a 0.2% increase in home prices. That is good news, surprising news, despite all the negativity that you are seeing in the market. We are actually up 1.3% year over year, which is down from last month's read of 1.5%, but still showing positive and really showing the positive impact of interest rates coming down. Let's take a look at pending sales. Another increase. Signed contracts rise 1.9% month to month. Yearly, we're up 3.8%. And the pace of sales went from 4.06 to 4.1 million homes. That is a good improvement. That's a slight improvement. It's well below the 5 million that the index is shooting for, but it is moving in the right direction. As a matter of fact, remember, the National Association of Realtors is projecting 4.5 to 4.6 million sales in 2026. And the lower rates are helping the sales index move up to its highest level in 6 months. Think buying a home in Oahu in 2026 is out of reach? Think again. You don't need to overpay, you don't need 20% down, and you don't need perfect timing. You just need the right game plan, and that's exactly what I'm breaking down today. And I've helped hundreds buy smarter, not just sooner. And today I'm giving you 5 strategies that could save you thousands with buying a home in Oahu this year. Let's be real. Oahu's housing market affordability is at all-time lows. Inventory's up, but prices are still high, and rates, well, they're not where they were 3 years ago. But here's the good news. There are still smart ways to buy and save if you understand how to play the 2026 market. 1. Work with a loan officer first, not last. Most people start with home shopping, but the real savings happen before you even start looking. By understanding what you qualify for and what programs you can access, like first-time buyer assistance, VA loans, or USDA loans for certain zones, you position yourself to act fast and negotiate smarter. 2. Target properties with seller credits or concessions. We're seeing more sellers willing to offer rate buydowns or closing cost credits, especially on listings that have been sitting for more than 30 days. Translation, you could save thousands up front and get a lower monthly payment without paying out of pocket. Nearly 75% of my buyers are buying with less than $1,000 out of pocket. Rent a house for $3,000 per month and you're paying $6,000 before you even open the front door. 3, don't skip the ugly ducklings. The prettiest listings get the most offers, but the homes that are solid structurally and just need cosmetic updates, that's where the deals are. And bonus, you can finance some of those repairs using seller credits and rolling energy conservation upgrades into the mortgage. Ask me about that. 4, time it right, but don't wait forever. Early fall and winter usually bring more inventory and slightly less competition. Don't wait forever trying to time the bottom, but know that seasonal trends can help you get a better deal. And 5, lock smart and refinance later. If rates drop later in the year and there's a decent chance they will. You don't want to miss out on the home you love just to save half a point. Focus on the payment you can afford now, and we'll build a strategy to refinance later if the market moves in your favor. Here in Oahu, you've got unique pockets where these strategies work best. West Side, Ewa, Kapolei. More inventory, new developments offer massive incentives, although I will say, buyer beware on those new builds. Mililani and Wahiawa, USDA eligible zones with lower down payment options. East Side, Kaneohe and Kailua, fewer deals, but more seller concessions on listings over 60 days old. Knowing where and how to look makes all the difference. FAQ, do I really need 20% down to buy in Oahu? Nope. In fact, most of my clients put down far less, some as little as 0% with VA or 3 to 5% with conventional and assistance programs. Let's talk. We'll see what works for your budget. One of my clients in Pearl City bought a $400,000 condo and received over $40,000 in seller credits, a lower price, an interest rate in the 4s on a 5-1 arm, and contracted upgrades to her home using seller credits. The only thing she paid was the $500 for a home inspection. If you're thinking about buying or even just curious, don't wait until the perfect time. Let's talk about what works now. I offer free strategy sessions where we go over your numbers, your goals, and your best options. Now, let's take a look at interest rates. You can see VA rates have dropped below 6%. Matter of fact, they are at the lowest point that they have been at all year. VA rates, as we ended this Thanksgiving week, 5.87%. That's on average, and there is room to go lower. And lower rates are already impacting the inventory. If you look at the inventory for homes in Oahu, you can see that we were at over 3,500 homes, tops in 10 years in Oahu in July. But you can see that we have dropped steadily since then, and we are now just above 3,200. Now, let's correlate from mid-July to now, and look at interest rates. You can see interest rates started dropping from 6.4% in July down to the 5.87, and we popped into the 5s at least 3 times now. So, what does that say about inventory moving forward in 2026? Do you think it's going to go up? Do you think it's going to go down? Well, here's one reason it's going to go down, but it's not going to fall off a cliff. The number one reason it's not going to fall off a cliff, because when rates go down, and anytime that rates have gone mid-5s, inventory has dropped. But what we're going to see this time is all of those handcuffed homeowners who own homes and are not wanting to sell because they don't want to get a 6.5% or 7% rate. Well, guess what? They are going to feel motivated. They are going to be incentivized to put their homes on the market. So yeah, inventory is going to drop, but it's going to be offset by people selling, those handcuffed homeowners coming off the bench and putting their homes on the market too. Mark my word, expect to see that in 2026, and expect to see a surge of buyers in the springtime of 2026. So buyers, if you're looking to buy right now, I tell you what, you got to get off the pot. You got to get off the bench. You got to get in the game. Mortgage apps are already up 20% this year. Home sales are starting to increase. You saw the numbers for pending home sales up, all right, the highest index in 6 months. And deals are out there. If you're waiting for the rates to come down, well, there's probably a good chance that they are. Maybe you lock in now. And with seller incentives, you're going to get a rate that's lower than you would if you wait for rates to come down. All right, say you're able to lock in a 5.75% interest rate right now, which a lot of my clients are locking in at on a 30-year fixed rate. Okay, well, maybe you do a 5-1 arm at 4.75 instead, because that's what some of my clients are doing as well. Some are going even lower, and they're using seller credits to do that. But if you wait until the rates actually get down into the mid-5s, maybe low 5s, guess what's going to happen? You're not going to get those seller credits anymore. So really, the time to get into the market is now. It's not later when everyone else does it, all right? If you try and follow the trends, you're going to be behind the power curve, and that trend of home ownership, you're going to fall behind on. When sellers I tell you what, if you put your home on the market now, it may sit. If you wait until the spring season, rates are down further, you have less time on the market, you're going to get more action in your property. And if it is staged right, if it is priced right, it is going to sell, and it's going to sell quickly. I would wait until the spring if I was a seller. But if your home's on the market now and you got no choice, you might want to think about seller credits. If you haven't done that, you might want to think about staging. All right, because, you know, people don't want to buy an ugly home. They don't. All right, put some lipstick on that pig, but make sure your home shows well. And in order to do those things, one, I think the biggest thing you need to do is work with the right realtor. I see houses that look meh. I would never buy them the way they're staged, but if you get the right agent, and I work with plenty of them, believe me, you will sell your home much quicker. All right, that's what I got for you this week. Have a great week and enjoy the rest of your weekend. We'll talk to you later. Aloha.